Welcome to Q&A Friday. I'm your host, Stan, the Annuity Man, America's annuity agent, licensed in all 50 states. My friend Chester the Grinch back there with the Fun with Annuities podcast hat, sporting it so well. Today's topic and question is, are annuity companies safer than banks? Now, at the time of this taping, we've gone through some banking issues, as they say, some hiccups in the banking world, and I think they're going to continue. But the bottom line, are annuity companies safer than banks? That's debatable. I will tell you this, they're not smarter than banks. They're just more regulated than banks. They're more handcuffed than banks, and they put measures in place with their products so that there's no run on the insurance companies that issue annuities. There's no run on that annuity company like there's a run on the bank when people go to the window and say, give me my money. I'll give you an example. There's three types of lifetime income products that are called annuitized products. Annuitization, in essence, in English, is ripping the knob off a water faucet. In this case, it's income. SPIAs, DIAs, and QLACs, single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts. You can't go to the annuity company and say, give me my money back. They're irrevocable. There's no liquidity. Okay? So there can't be a run on SPIAs, DIAs, and QLACs. Now let's talk about MIGAs, multi-year guarantee annuity, the CD version, the annuity industry's version of a CD, and also indexed annuities, which is also a CD product. Spoiler alert, it's not a market product, it's a CD product. But those have surrender charges if you want to get out early in the contract, which prevents a run on those types of products. In addition to that, in addition to those safety measures, annuity companies are always stress testing, are always looking at the worst case scenarios. They with fixed annuities that are regulated at the state level, when you give an annuity company your money, they have to put 100% of that money on hand liquid day one in investment grade bonds. That's just the law. They're not loaning it out and buying crypto and doing stupid things, because they would if you would allow them, probably. But are annuity companies safer than banks? There's an argument that yes, they are, but FDIC coverage is still the strongest coverage, because people like Miss Yellen with the Treasury can change the rules and say they cover everything, or they cover whoever they want to cover. But I'm going to tell you this right now, Stan the Annuity Man, America's annuity agent. This is a time that the annuity companies are shining, not because they're better, it's just because they're a lot more conservative, a lot more regulated, and the rules in place really restrict them from doing things stupidly with your money, which is good, because when you get to this point in your life that you want a lifetime income guarantee or a principal protection guarantee, you want to make sure that money is safe with the annuity company. And I have to applaud right here the people that really get the nod. The National Association of Insurance Commissioners, every single state has one that oversees the fixed annuity space, which includes index annuities, immediate annuities, qualified longevity annuity contracts, etc. But they make sure that those carriers that are approved in their state to be sold to their citizens in that state are following the rules, and they're solvent and doing the right thing. So kudos to the NAIC from Stan the Annuity Man. And that's Q&A Friday. I'll see you next week.